Joining me now with more, Scott Ladner. He's the Chief Investment Officer at Horizon Investments. Scott, it's great to have you.
Thanks, Kristen.
So I know you're a macro guy, but it's hard to really look at the macro without also focusing on NVIDIA just based on its sheer size. What matters from this event and the keynote from the CEO today?
So the market is definitely going to be keying in on this event. We all know this has been well publicized, but the thing that the market's really going to be caring about for the broader scope. I mean, not for like NVIDIA specific things. So Jensen will certainly talk about Blackwell. We'll certainly talk about some of the advances they're making and sort of some numbers around that the AI geeks might kind of get excited about. But for the more global economy and for the more sort of global market stuff, the thing that's really going to end up mattering is, does he touch on sovereign AI, which is like the next probably big demand push we're going to get is different countries getting into the AI game and really pushing on that. And does he even mention anything having to do with quantum? Because right now NVIDIA's growth is all predicated upon the AI chip trade and everything going on with that. But if we get to if they figure out a way into the quantum game that's coming in the next 3 to 4 years, that's probably another leg of growth that the market's really not pricing yet.
It comes at such a crucial time, right? Because last week we had seen the S&P 500 close in correction territory, down 10%. We've heard the remarks from President Donald Trump. We've heard them from Treasury Secretary Scott Bessent. This is a detox period, a period of transition. Both of them not ruling out the possibility of a recession. So talk to us about what is important, how this could impact based on where we are right now in the market, the direction of equities.
So it could give some stability in the AI trade, which obviously has been clobbered over the last month or two, as valuations have come in and uncertainty is really sort of winning the game with, between animal spirits and uncertainty's been clobbering animal spirits right now. So if Jensen can come on and provide some clarity and perspective on what's the next leg look like, is sovereign going to be the next the next big thing? Is this going to really be globally adopted as we all think that it's going to be? That could calm some of this uncertainty that's swirling around right now in the trade sphere. That's not been very helpful, obviously, over the last month.
So let's talk about this administration and the volatility that we've seen of late. Of course, it is President Trump's second term in office, but it looks a little bit different than the first term. And even I would say in the first 2 months of his administration, one expectation of massive growth, and then obviously the tariff setting in and the significant Doge federal government cuts as well. How would you explain the difference?
Yeah, Kristen, it's great. It's a really good question because it's important. And this is the thing the market's been really grappling with. We thought we were getting a pragmatist like we did in Trump 1. Trump's first term, he was willing to do almost anything to avoid market pain and economic pain. He would kind of shift his agenda around to avoid those types of things. Trump 2, he's acting much more like an ideologue, and he's much more idealistic in the things that he wants to get done for the economy in his own vision. And he's obviously not saying anything about kind of protecting the markets or protecting the economy over the short term because he believes so strongly that these are the right policies for the medium and long term. And so, that realization that the market's been coming to, that we don't really have somebody that's got our back. We don't really have a pragmatist in office. We have somebody that's much more focused on sort of his ideology and his longer term thinking. That has caused a lot of this volatility, and eventually that'll get solved. Like eventually the market will come around to the idea that a lot of these things that he's talking about, the sequencing is different this time. We're doing the hard stuff first instead of the easy stuff first. But eventually the hard stuff that we're doing right now will end up paying dividends, but it's going to take a little bit of time, and that's caused some frustration and angst in the market.
So how should investors respond to that? Should they be looking at their portfolios and making changes?
Yeah, I think they should. This is a time the AI boom is him, as my kids would say. I mean, this is the real deal. And so anytime you can get these shares or these types of securities at what's frankly kind of a discount right now, you need to be loading up on those. Additionally, the thing that Trump's also done is made Europe investable again and made China, frankly, somewhat investable again, which is neither one of those have been investable for almost a decade.
Yeah.
And he's really just sort of bullied them into fiscal policy changes and regulatory policy changes. Those are two really big, important things that have made the rest of the world's equity markets somewhat attractive again.
Interesting. So even though President Trump does have an America First policy with the interest rates coming lower in Europe and certainly the defense spending, is that the thesis behind European equities?
It is. I mean, it's just the idea that we're going to get out of these fiscal handcuffs that Europe has sort of imposed upon themselves since 2012, really. And if Europeans really start spending money again on the fiscal side, on the government side, to sort of make up for what's been lacking on the consumer demand side over there, that's a game changer for European growth. And then if China can come off of this, the common prosperity idea that Chairman Xi was putting out, really anti-capitalist sort of propaganda. He hates private companies. If he's coming off of that because he needs to protect his economy against the tariffs that are coming, both of those are really sea changes in terms of how we need to think about the growth potential for some of these global economies.
So here's a question for you, Scott. I mean, do you think this is an investable dip right now? The S&P 500 ending yesterday down about 7.7% from its record high.
Absolutely, yes. I mean, this is a place where we are still probably going to get some more pullbacks. We are probably going to go lower at some point than where we are today. We do think over the next couple 3 weeks. But eventually, the market's going to realize that the consumer's in great shape, companies are in great shape, the dollar is not going up or not going down, is relatively stable, which is a really strong thing. And we will end up getting some clarity on some of these policy changes that Trump's putting forward. And once we get that clarity, people can start planning again and investing again and doing everything else. But if you wait until you get that clarity, it's going to be too late.
So we're going to hear from the Fed Chair Jerome Powell tomorrow. No one's pricing in a rate cut. I'm sure the Fed would broadcast that, obviously, if that was really in the cards. But do you think he's going to remain behind the curve? How do you anticipate that Powell will address what has transpired?
I think Powell is going to do about what he's done over the last month or so, which is really say, listen, there are four large policy changes that Trump and his Trump policies are putting forward, making large policy changes with respect to trade, immigration, fiscal policy, and regulatory policy. And it's really the net effect of all four of those changes that's going to end up making a difference or not for the economy. And so what he's going to say is, listen, we got to see how these things are going to play out, at least for a little bit. We have to know what the policies are so we can have a chance to model them, have a chance to understand them, because these four large policy changes that we're dealing with.
Scott Ladner, Chief Investment Officer at Horizon Investments. So much to talk about these days. Scott, thanks so much.
Thanks.